Right. Okay, one question related to the maximum price ceiling. Okay, government of a country impose maximum price ceiling. So then when you are reading that kind of question, you have to identify the main features of the questions. So now in here, the question says that maximum price ceiling, impose maximum price ceiling. So maximum price ceiling enforced by the government to protect the consumer. You have to identify those things. Okay, price ceiling on particular good to make more affordable. Yes, more affordable to consumer, not for the sellers. Okay, right. The demand and supply for the good are represented by following equations. You already given two types of equation. QD, I mean demand curve 200 minus 5p. Okay, and then QS equal 20. It is not minus. Okay, plus 20 plus 3p. And first question is calculate the market equilibrium price and quantity. Second question is calculate the consumer surplus and producer surplus at the equilibrium price, I mean equilibrium position. Okay, and then calculate the quantity demanded and quantity supply under the ceiling price. Determine the shortage cases by the there is no ceiling prices actually in here, so we have to put the values. Okay, I will put the value after the calculation. Okay, after the first calculation I will put the value to the price ceiling, I mean maximum price. If I given this time it will be row, that is why I'm not going to give. Okay, right, but in question paper you have already given each and every things. Okay, right, and discuss the impact of the maximum price ceiling on the market efficiency. I mean, in this question they are asking about the effect of the maximum price ceiling to the consumer surplus, producer surplus, and something like that one. And the final thing is black market prices. Okay, so those are the things we have to consider in here. First of all, then write down the equation again. QD equal 200 minus 5 phi, and QS equal 20 plus 3p. Right, so those are the three equation we have given already. Now by using this two types of equation, we can calculate the market equilibrium price and market equilibrium quantity. The concept behind that calculation is, in the equilibrium, delta QD, sorry, QD must be equal to the QS. Okay, this is the rational thinking. So then 200 minus 5p must be equal to the 20 plus 3p. So then 200 plus 20 become minus 20 after changing the part, and 3p plus 5p, because minus 5p become plus 5p. 5, 6, 7, 8. 8p must be equal to the 108. So then both side divided by the 8. Okay, and mean 108 divided by 8. So you got answer. It is
22.5. 22.5.
22.5. Yeah, this is the price. You got the value for prices, and then you have to put the value already calculated value to the both, I mean QD or QS. Just only one equation. Okay, 200 minus 5e, QD equal 200 plus, sorry, minus 5 multiplied by 22.5. So QD equal to 100 minus multiplied by 5. That means 112.5, isn't it?
Yes.
Yeah, minus 12.5. So 87.5.
Yes.
This is the quantity. It must be quantity demand or quantity supply, both. Okay. So already identify the equilibrium position. But in here, you have to do one thing. So I recommend that after finding the equilibrium price and equilibrium quantity, you have to draw that in a graph. Reason behind that kind of activity, if you have done errors related to the calculation, you can identify that one by using the graph. So then 100% you can sure that this answer is correct. Okay. Without drawing the graph, you can do the answer. You can find the answer. Yes, I agree with that one. But I recommend that you have to do it. Okay. So then
So on the paper itself or in a draft paper?
no, they are not asking about that.
Oh.
They are not asking, but you have to do it. Okay. Because without that graph, if you are going to calculate that consumer surplus and other things, you will get the wrong calculations, wrong values. So then answer also must be wrong. But after sketching that kind of graph, you will identify that this is the actual prices. This is the real prices. And if you done anything wrong related to calculation, it also can be correct by using that graph. That is why I recommend that you have to use that. Okay, fine. But in exam, they are not asking about that. Okay, this is not necessary actually. Okay, some questions asking about that one directly. Draw the curve or something like. Okay, now start the drawing. Get the horizontal axis for the Q and just vertical axis for the prices. Okay, let's label it. This is P, this is Q, and this is the 0 point. And then first of all, we have to identify the crossing point for the QD curve, I mean demand curve. QD equal 200 minus 5E. So then assume that P equal to 0, find the value for the QD. Assume that QD equal to 0, find the value for the A. So just use that equation. Assume that P equal to 0. 0 multiplied by 5, it is 0. And QD become 200. Are you okay with that one? Yes, okay. And then again, QD becomes 0. We assume that QD 0. 0 equal to 200 minus 5e. Minus 5e change the direction. Okay, it become change the side and it become plus value. And 200 divided by 5. So it become 40. Okay, right. So then it crossed the 40 when the quantity demand equals 0, price axis crossed by the 40. When the price equal to 0, demand curve cross the horizontal axis at 200 level. Okay, right. And then connect all those things. And let's move to the next one. Next one mean QS curve, I mean supply curve. QS equal 20 plus 3P. Just assume that P equal to 0, find the value for the QS. QS equal to 0, find the value for the P. So just assume that P is equal to 0. 0 multiplied by 3, it is 0. QS equal to 20. Okay, right. And again, QS equal to 0. So then what will happen to the value for the P? That means 0 equal to 20 plus 3P. Okay, just change the side of the 20, it become minus value. Okay, right, equal to 3P divided by 3. Okay, 20 divided by 3, it is 6. 20 divided by 3, 6.66. It must be minus value. Minus 6.66. Minus 6.66. Okay, now we are going to mark that. When price is equal to 0, quantity demand 20. Something like that one. Okay. When Q equal to 0, price become minus value. I mean something like that one. Minus 6.6. Yeah. Now we can draw the line for the QS curve. It is something like that. Okay. Right. Supply, this is demand. Are you okay with this?
Yes.
Calculation? Okay. Is there any question you can ask? Okay.
Yes.
Right. Next, because in here we have to calculate the already first one is okay, because in the first question they are asking about that calculate the equilibrium price and equilibrium quantity. Equilibrium price is just 22.5, equilibrium quantity 87.5. Okay, now second question, calculate the surplus and the producer surplus and consumer surplus at the equilibrium price. So now you know the equilibrium position. Okay, this is the equilibrium position. I will label it by using this one. I will label it. This is the equilibrium. Okay, it's better to here. Sorry. Just use this kind of line. Okay, it is very easy to identify. Equilibrium. Price is 22.5 and quantity is 87.5. Right. Then already you know that where the consumer surplus. This is the consumer surplus area. Okay. You can calculate the consumer surplus area. How? By using mathematical equations. Okay. Write down something like that. Half into height and length. Height how much? Sorry, length is 87.7. Length is the difference between 40 and 22.5. It is 70.5. Isn't it?
Yes.
Right. Okay. Now 87.5 divided by 2. 87.5 divided by 2. it become 43.75. 43.75 multiplied by 17.5. So it will become 600, sorry, 765.62. Are you okay with that one?
Yes.
Okay, right. This is the consumer surplus. Okay. Now there's a problem in here. Just look at the consumer surplus area. So this is the advantages when you are going to sketch that kind of graph. If you don't have any kind of graph, then you cannot identify the exact crossing point for the supply curve and demand curve. But in here, you can identify the supplier start to supply when the price, sorry, supply start the supply when price equal to 0 by 20. Quantity start from the 20. Okay. Quantity start from the 20. I mean, when the price of the commodity, certain commodity change from 0 to any amount, they are going to start the supply from 20 amount. That's the meaning of this one. But in here, you can identify when the price equal, when the quantity equal to 0. I mean, when there is no any supply, quantity equal to 0, price become, supply price become minus value. So then in practical situation, you can identify there is no any transaction for the minus prices, isn't it?
Yes.
Yes. In here, when you are going to calculate the producer surplus, ignore this area of value because it is minus value. Why? There's no any transaction for the minus values. That is why you have to give up this one. And then, so where are the producer surplus represent? It represent by producer surplus, I mean PS 0 and 20 and E and 22.5. This is the area. මේකට අපි මොකක් කියලාද කියන්නේ මේ shape එකට? I forget it.
Rectangle.
Rectangular. So then how we can calculate the values for the rectangular? Plus of the parallel lines divided by 2 and multiplied by the height. So this is the equation. Or you can use another tactics in here. I will tell you another tactics also. Just get the value, height and length without thinking about the minus values. Okay, without thinking about the minus value, get the area of value. Okay, so that means half into height mean I will take this one. Okay, 22.5 plus 6.66. Okay, it is 29. 29.16. Length, this is the length, 87.5. Okay, right. I'm going to divide it 87.5 by 2. It's become 43.75 multiplied by 29.16. Okay, 29.16 multiplied by 43.75. So it become 100, sorry, 1,275. Okay, 1,275.75. This is the full area value. Okay, but we have to ignore the value for this area. 20 half into height. Height must be 6.6. Okay, length must be 20. So 6.6 multiplied by 110. Okay, it is 6.6 multiplied by 10. 66, isn't it?
Yes.
So this is 66. Okay, minus 66. Minus 66 from the large area values. So it become 1,275 plus, sorry, 75.75 minus 66 equal to 1,209.75. This is the area. We can say that this must be the producer surplus. This is the producer surplus. Okay, we already calculated. And now we have to calculate another thing. That is, now we can decide what will be the maximum price, isn't it? Yes. So just consider, I'm going to put the maximum price value as just 10 rupees. Okay, 10 rupees. And just write the lines, it is just 10 rupees. This is the price where imposed by the government as maximum price to protect the consumers. Okay, but you can identify after imposing maximum prices, the response of the demand and the response of the supply can be changed. We have to identify the response. Okay, මම මේ දේවල් මැකුවට කමන්නේ නේද මෙතන calculation.
සර් මට යට ටික පොඩ්ඩක් ලියා ගන්න බැරුව ගියා.
හරි. Okay, right. So then next, government impose 10 rupees as maximum price. Okay, they try to protect the consumer. That is why they decide a price below the equilibrium, actual equilibrium price. Okay, they expect deciding something like that kind of prices, it become suitable prices for the consumers. That is why they are going to decide it. But in here, you can identify the decision related to the consumers and producers after the imposing maximum price, it can be changed. For example, this is the amount where you can identify supply amount. Okay, this is the amount where you can identify demand amount after the maximum prices. Okay. If you are going to think about again the theory of demand and theory of supply, you already identified the relationship between price and quantity demand, it was negative. Okay. After imposing a price reduction, price reduce, then what must be the quantity? Quantity must be increased. Yes. That is why quantity increase, demand quantity increase. So the relationship between price and supply, it is positive. So after reducing the price, quantity supply also must be reduced. Yes, that is why quantity reduce. In here, but still we don't have any idea exactly the value for the reduction demand and reduction, sorry, reduction supply and increased value for the demand. So we have to calculate it. Then how we can calculate it? Nothing to worry. Take old demand equation. Okay. Put the 10 rupees value for the price. That's enough. Okay. Then QD equal 200 minus 5 multiplied by 10. QD equal 200 minus, it is just 50. So then QD become 150. Okay. So this is the area. 150. Okay. Now demand increased 87.5 to 150. Now you can identify the negative relationship between price and quantity demand. Yes. And again, just use the old QS equals 20 plus 3 P. And QS equal 20 plus 3 multiplied by 10. QD equal 20 plus 30. So then QS
50.
must be 50. So then this value is 50. After the imposing maximum price, the quantity of supply reduced from 87.5 to 50. Now you can identify the positive relationship between price and supply. Okay. මේ ස්ටෙප් ටික හදා ගන්නවද?
Yes.
Right. Okay. Now you can identify early equilibrium price was 22 point, isn't it? 22.5.
Yes.
Okay. Equilibrium quantity, it was 87.5. In that position, the expectation of the demand party and the expectation of the supply party, it was mutual agreed. Same quantity and same prices. So then there is no any excess demand and excess supply at that point. But after enforcing prices by the government, each and every economic activity, I mean market activity change. Okay, quantity demand increase, quantity supply decrease. So now you can identify there is no any mutual agreement between sellers and buyers because of the government intervention. So then we have to identify that the amount of the excess demand after imposing a maximum price ceiling. Now you already identify the equation where we can calculate the excess demand. Okay, E x QD equal QD minus QS. This is the equation, right? EX mean excess. Okay, QD mean quantity demand. QD in here, QD represent the quantity demand after the maximum price ceiling. It is 150. Yes. QS mean the quantity supply after imposing maximum price. So it is 50.
50.
Now you can identify excess demand. It is just
100.
Hundreds. So now in here, after creating the curve, you can identify the difference between those 2 points. I mean this, the length of this point, these 2 points is the maximum excess demand, isn't it?
Yes.
Yes, that's the area. Okay, now you already identify the excess demand after enforcing the maximum pricing.
Yes.
Right, okay. Now copy this calculation, I mean maximum, sorry, excess demand calculation. Right. So then they're asking shortage. Determine the shortage of case by the price ceiling. Shortage amount is also equal to the excess. Shortage mean not enough at that point.
Yes.
The amount is 100 because 150 is the demanding quantity, but entire market supply only 50 commodities. So then 100 is shortage. So then now you can identify the word of shortage equal to excess demand.
Demand.
Yeah, excess demand. Now again, one thing you have to remember, what is, if I am discussing about excess supply, it must be the surplus. වැඩිපුර තියෙනවා කියලා කියන්නේ. It is not about the consumer surplus and producer surplus, okay? This is amount surplus. So this is the combination between those two. I mean shortage, if you are any kind of question discussing about the shortage, you have to identify this is related to the excess demand. Okay, right. Any words they can use. And now we are going to calculate the another things. Discuss the impact of maximum price ceiling. So we have to identify the impact. So already identify one impact. It is excess demand. First one is excess demand. Okay. We will list out what will happen. Okay. I will write down the one by one what will happen after the imposing that kind of maximum price. Okay. First one is shortage. It is equal to 100. This is the first impact. Okay. So then what will happen to the price of the commodity? After shortage, it must be increased. Must be increased. Which amount? Now you can identify this is the amount. This amount. Okay. We can call it black market price. Okay. Black market price. But in here, we don't have any idea what will the exactly amount of the black market price, but we have to calculate it. Okay. Then I will tell you the method you can calculate the maximum, oh sorry, black market price. Yes. You can identify the black market price. Just look at the graph. This is demand curve, demand equations. Okay. So this demand equation crossed by the 50 amount. And we don't have any idea about the prices. So get the QD equation, QD equal to 100 minus 5E. But we know in here, we know the amount of the QD. It is 50. Then 50 must be equal to 200 minus 5E. Isn't it?
Yes.
Yes. So then we are going to identify the value at that point. So then we are going to change the directions. Okay. 5 minus 5p become plus and 250 become minus 50. 5p equal 150. So then 5 divided by 2 parts by the 150 divided by 5. It is just 30. So then price equal to 30. So this is the black market price. 30. Okay. Okay, calculate it. Black market price. Right. This is the second impact. First impact is shortage. The market quantity becomes shortage. It is 100. Second one is black market price. It price become 30 rupees. Okay. This is the second impact, and I will go to the third impact. Okay. Third one. Third one is maximum price. Already we calculate the consumer surplus and producer surplus. Okay. But after imposing that kind of maximum prices, each and every economic activity, I mean demand and supply, change. After imposing the maximum price, producer surplus reduce to this amount. Okay. From this to here. So now you can identify after government intervention, producer surplus reduce by reasonable margin. So after enforcing maximum prices, producer surplus is here. This one is consumer surplus, this one is producer surplus. Okay. Producer surplus also reduce that amount, this area. Okay. Now you have to identify what will happen to the other things. I mean, this area not related to the anyone. Okay, not related to the anyone. Early, it was belong to the consumer producers, but it destroyed by the maximum prices. Okay, so then calculate the values for this one and this one. Okay, so you already identify the values. Half into 50 multiplied by 10. Okay, I mean 25 multiplied by 10, 150. Okay, and again 25. So you already calculate the consumer surplus. What the value for the consumer surplus before the maximum price ceiling?
765.62.
760.
5.62.
62. So then now you can compare the values.
Yes.
It reduces. Okay. So then again you have to calculate the value of this area. Okay. Just consider about whole area and reduce this amount. It is easy to do that. Okay. 50 multiplied by 16.5, isn't it? Yes. 25 multiplied by 16.6. Yeah. 450. But you have to reduce that minus value from here. We already calculated the values for the minus area. How much is it?
So how did you get 16.6? Okay, I lost that.
This is the area.
Yes.
Start from here, end from here.
Okay, 6.6.
We are going to take the length value, not the minus or plus.
Okay.
That is why it becomes 16 point. Okay. Right. So what is the value for the minus area? We already calculated.
So then it is not 16.6, right?
Yeah, 16.6. Yes. This is
so you have to reduce 6.6 from 10, right? You have to get the difference from of that, right?
no. This is 0.
Okay, sorry. Okay.
0. The length
Okay.
value.
Okay.
Length value.
Okay, sorry.
It because it is plus value and minus value.
Okay.
So we already calculated the minus value area. What is?
66.
66. Okay. Okay, now it become 349. Okay. I think it also reduce. Yes. Now you can identify the real impact of imposing maximum price ceiling. Okay. Real impact of maximum price ceiling. Okay. Now we can move to the tax calculations. Okay. Tax calculation. I will cover the minimum price also by using a calculation. Okay, don't worry about that. Now let's move to the tax calculation. I mean, government impose taxes to the exchanging goods and services. Tax can be imposed by using several methodologies. But you have to identify there must be a basement to the tax. Okay. It must be based on the consumption or production. It must be based on the value of the commodity or exchange amount. Okay. So then different types of taxes are there. But in economics, especially, we are going to discuss about the taxes imposed to the sellers. Okay. Because imposing taxes for the consumers, it is very hard to collect. Okay. Because we don't have any statistical related to the consumption of the people. We don't have any idea about that one. Actually, it is unable to calculate. So, but we can calculate the selling quantity and production quantity because already it calculated by the organizations. So imposing taxes related to the production amount or selling quantity, it is easy to collect the tax income. That is why we are going to impose tax for the selling quantity or tax on sellers, tax on producers. So tax on producers can be in two categories. First one is unit tax. We call it unit tax, or we call it specific tax. I already said that to impose a tax, you must have a basement. On what factor you are going to impose the tax? That's the meaning of basement. As an example, just consider government impose a tax related to the income. Okay, if anyone work as a worker in government or private sector, if they earn more than 150,000, they have to pay tax. This is the amount. So this tax based on the earning of the workers, monthly earning. That's the basement. So this unit tax is based on the production unit. selling unit, quantity of the production, quantity of the selling. So now you can identify this unit tax is based on the Q. Q mean quantity. Okay. And second one is ad valorem tax. We call it value added tax. Ad valorem tax. This tax is based on the value of the commodity. Value of the commodity. As an example, just consider about the 20% tax, value added tax. So if the value of the commodity is 100, you have to pay 20 rupees. If the value of the commodity 1000, you have to pay 200 rupees. If the value of the commodity time 10,000, you have to pay 2,000. So this is the ad valorem tax, how it works. This is based on the value of the commodity. It always ad valorem tax represented by using percentage values. Okay. In Sri Lanka, we are going to use mostly famous as VAT, ad valorem tax. Okay, value added tax, or we call it value added tax. Okay, now I already said that each and every taxes is impact to change the mind of change the activities of the supply. Okay, related to the supplier changes, demand quantity also can be changed. It is another activity. We can identify all those things one by one. First of all, you have to identify, because of that kind of taxes, the supply curve, supply equation, supplier identity, supplier decision can be changed. Okay, as an example, just consider. I will prove it. This is QS equation. Okay, 200 plus 2P. Okay, as an example, just assume that this is a quantity supply equation for particular commodity. Government imposed unit tax. First of all, I am going to discuss about the unit tax because value added tax is complex, more than unit taxes. Okay, after calculating unit tax, we can calculate the value added tax. Okay, first of all, I am going to discuss about the unit tax, not about the ad valorem tax. Unit tax is just 2 rupees for one commodities. So then what will happen to the two commodities? If you are going to produce two commodities, you have to pay 4 rupees.
Oh.
If you are going to produce 10 commodities, you have to pay 20 rupees. That's the theory. So then how we can combine the unit tax with the certain QS equation. QS equal, this is the equation A plus B. This is how we develop the QS equation. QS equal A plus B within brackets P minus T. T mean taxes. This is the method. Okay, you got it? Right.
That's
Then
the equation.
huh?
That's the equation, right? The P
That's the
minus P.
equation. That's the equation, but you can simplify that one.
Okay.
Something like that one. Okay. Look at the blow. QS equal A plus we are going to multiply by B or the equation BP and minus BT. Okay. If you think this is complex, this is the method. QS equal to 100 minus plus 2P. So tax is, unit tax is just 2 rupees. QS equal 200 minus, so 200 plus 2 within brackets P minus 2, 2 mean taxes. Okay. QS equal 200 plus multiply by 2, all the things within brackets 2P plus 2, 4 minus 4. Okay. දෙකයි 4යි plus එකයි minus එකයි value එකයි multiply වුණාම minus ඉතුරු. So then QS equal. So those are similar values. So it become 196 plus 2P. This is the final thing after imposing taxes. Now you can identify what will happen if government impose unit tax. What will happen? The value for the A can be changed. What's the meaning of A? A means when the price equal to 0, the amount, starting amount of the selling quantity. It can be changed because of the unit tax. That is only happen. Okay. Just copy this, all those things. Are you okay? Right, okay. Now, after enforcing unit tax, you can identify the value for the A is going to change. Okay. So how it
I'm sorry, sir, I didn't hear that.
value for the A is going to change.
Oh.
How you can identify that situation by using a curve. This is demand curve, okay, and this is supply curve. But you can identify the value for the B always 2. That means the slope of the curve is not going to change. No change. No change in the slope of the curve. But starting point can be changed. Especially, you can identify, if you identify that values clearly, not into details, it's reduce. Yes. Reduce mean change to that direction. This is start from this value. And there is no any change in the slope value. That means it become parallel line. This is the supply equation after taxes. So if it is, this is the equilibrium position 1, what will happen to the market prices after the taxes? It increase. What will happen to the exchanging amount of the commodities?
Decreases.
Decrease. That is the effect of the tax. In normal situation also, we know that after enforcing taxes of the for the exchanging commodity, the price of the commodity can be increased. Yes. And the exchanging amount also can be reduced. Just consider about the vehicle prices of this country. Yeah, imposing high level of taxes, the price of the vehicle is going to be in upper level. So what about the exchanging amount? It also reduced. So it is normal thing. It is what happened in actual situation also. Okay. So now we have to identify that situation by using equations. Okay. If you can copy this graph also, it will be good for you. Okay. Right. Then copy this two equation into your notebook. QD equal 500 minus 20p. Okay. Right. QS equal 20p. There's no value for the A. Yes, it can be. Okay. So this is the two equations. Just copy those two equations into your notebook. By using those two equations, we are going to identify the impact of unit tax. Impact of unit tax. Okay, right. First of all, we have to calculate the equilibrium prices without taxes. Okay, the tax amount is, unit tax is just 5 rupees. Okay, unit tax is just 5 rupees. Okay, let's move to the calculations. First of all, we are going to identify the exact values for the equilibrium values for this one before the taxes. Okay, that means 500 minus 20p must be equal to 20p. So then 500 must be equal to 20p plus 20p. So then 40p equal to 500. Both sides divided by the 40. Okay, so then what will happen to the price? 12.5. Yes, 12.5, isn't it?
Yes.
Yes, okay. And we are going to calculate the equilibrium quantity also, okay, by using demand curve. 500 minus 20p, QD equal 500 minus 20 multiplied by already calculate price at 12.5. Okay, so then what happened? It become a 500 minus, I mean 250, isn't it? Yes, 250. Yes. Okay. So this is the equilibrium. Just draw the graph related to the these calculations. Okay. Right. This is price axis. This is Q axis. Or without calculation. Okay. Without calculation, you can identify the crossing point. How we? Just take this QD equation. Okay. Just assume that P is 0. P multiplied by 20 or 0 multiplied by 20. It becomes 0. QD must be 500. Yes, this is 500. Okay, just assume that QD equal to 0. That means 0 equal to 500 minus 20p.
Yes.
Change the side of the 20p, it become plus 20p. That means 20p equal to 500, isn't it? Yes, that means 500 divided by 20. It is 25. So this crossing point is 25. You can do it by without calculation. If you think it is hard, you can do same. Just assume that just about consider about the QS equation. There's no value for the A. So then that means this is start from the 0 point. Start from the 0 point. Nothing to hesitate. Okay. Start from the 0 point. Something like that one. Okay. So this is the crossing point. We know that it is equilibrium price. So price become 12.5. Quantity become 250.
50.
Yes. This is the equilibrium position. Now, government imposed taxes. Now we have to identify the impact of tax. Take the supply equation. QS equal 20p. For the 20p equation, add the tax 5 rupees. Okay, that means QS equal 20 within brackets P minus tax. Tax mean T. Okay, that means QS equal 20. We don't have any idea about the P, but we know the value for the P tax. It is 5 rupees. So QS 20, 20p, and minus 100.
Yes.
Yes, minus 100. As a normal format, if you think about a normal format for the QS, it must be QS equal minus 100, isn't it? Plus 20p. Yes. අපි මේක මෙහෙම හදාගන්නේ ලේසි වෙන්න. ඇයි? අපි කොහොමත් එහෙම ගණන් හැදුවේ නැත්නම් ඕක පැටලෙනවා අපිට. ඒ හින්දා මේක මෙහෙම විදිහට හදාගන්න. ඒතකොට ඔයාලා ලේසි මේක ගණන් හදාගන්න. Right. Okay. Now we already identified the impact for the supply equation, but after tax we have to calculate the equilibrium prices and quantity. So now we got the idea related to the shift of the supply curve. What will happen? A value is minus 100. So it must be start from that one, minus 100, isn't it?
Yes.
The crossing point, it also must be here. Just identify P, QS, P0, QS become minus 100. Okay. So what will happen? QS 0, QS 0, 0 equal 100 minus plus 20 fee. That means 100 equal 20 fee. So then 20 divided by 20, it is 5. It is 5. Something like that one. So it must be parallel line, okay? Why? Because there is no any change in the slope. It must be parallel, something like that. I think it is parallel, okay? You have to show that it is parallel. This is the S curve or S with tax. Okay. Right. So this is the equilibrium point number 2 after tax. So we have to show that because of tax, the supply curve shift to upward. Okay. That is how I've used arrow to show the shift of the supply curve. So this is the new equilibrium price and this is the new equilibrium quantity. Okay. New equilibrium price and new equilibrium quantity. But we don't have any idea about the values because we didn't calculate it yet. Okay. Did you done all the things until this point?
Yes.
Okay, right. So then let's go to the calculation of equilibrium point after the taxes. Okay.
Yes.
That means QD equal to QS. Right. We already know the value for the QD or equation for the QD. It is 500 minus 20p. So whatever the QS, QS change. Minus 100 plus 20p. Right. So then 500 plus 100. Okay. So then 20p plus 20p. That means 40p equal to 600. Both sides divided by the 40. That means 600 divided by the 40. It is 50. Are you okay?
Yes.
Right. So what will happen to the price? It increase to 15 from 12.5. Right. After that, we can calculate the values for the quantity. So careful in that position. Don't use the early supply equation. If you use early supply equation before the tax, the answer can be wrong. So because of that, as a tactic at that point, use old QD equation because QD equation is not going to change. So then 500 minus 20p. So then we don't have any idea about the QD. 500 minus 20 multiplied by price is
50.
50. Yes. 15 multiplied by 20. It is 300. So 500 minus 300 means 200. So what happened to the amount? It reduced to 200 from 250. Yeah, that's the point. Now you can identify the impact of unit tax. Okay, it changed the value for the A and supply curve, I mean S curve, change the direction. Okay, sorry, shift the supply curve. Shift the supply curve into the upper side, upward shift. And the equilibrium price increase. Okay, equilibrium price increase to 242 50. And what happened to the equilibrium quantity?
Reduce.
Reduce. It reduced, already reduced. Okay, from 250 to 200. Okay, in here you have to identify if there is unit tax intercept, I mean the value for the A intercept going to reduce, but there is no change in the slope value. So that means the supply curve must shift in parallel line, as a parallel line. Yeah. Those are the things we have to identify in here. Right. Now this is the complex things. We start from here. Okay. So we have to calculate. Are you okay with this point?
Yes, sir.
Until this point? Okay. So now I think I can erase those things. Okay. This curve is graph is essential to describe the other thing. That is why I'm erasing now. Again writing I'm writing. Okay. Right. Right. Okay. Next one. Just consider before the tax, how much is the consumer surplus? Before the tax, how much is the producer surplus? We have to calculate all those things in the exam paper. It is very important. Okay. Just try to grab the important topics, important tips. Okay. First of all, we are going to calculate the consumer surplus, I mean CS, and PS. PS mean producer surplus, CS mean consumer surplus. Before tax, at that point you have to think there is no taxes. That means the equilibrium position is 12.5 and 250. Okay, right. And now use the mathematical equation for the CS mean consumer surplus. CS equal half into length is just 250. Height is the difference between 25 and 12.5.
Okay.
It is just 12.5. Yes, 12.5. Okay, and here the value is divided by this one. I mean 250 divided by 2 and 125. 125 multiplied by 12.5. Okay, it is 1562.5.
2.5.
Yeah, this is the value for the CS. I will write down in here. Okay, CS 1562.5. Okay, now we can calculate the PS value. PS mean producer surplus. Half into length is 250. Similar. Okay. Height is 12.5. Are you okay with that one?
Yes, sir.
Okay. 12.5. So answer must be similar. Yes. PS also 1562.5. Okay. Already calculated. This is the problem. So how you can calculate the consumer surplus and producer surplus after tax? You know that supply curve change. Okay. After tax, PS and CS. Okay. Write down in, sorry, look at the, I will show you by using sorry, this one. Okay, this one. Okay, look at the board. So this is the equilibrium price. I mean 12.5. This is the equilibrium position. And this is the maximum price. And this is the area you can represent the consumer surplus before the tax. But in here, you can identify values can be changed after the taxes. This is the equilibrium price, this is the equilibrium point, and this is the maximum price. So then, between those two, 50, 25, and 200. This is the area we can represent the consumer surplus after tax. Yes. Now you can calculate it. How? Half into 200 plus, sorry, multiply by 10, isn't it?
Yes.
Yes. 100 multiplied by 10. So then CS become 1000. So now you can identify CS reduce 2000 from 1562.5. Because of this kind of taxes, the consumer surplus reduce. This is the things you have to identify. Then you can identify consumer surplus or consumers loss 562.5 surplus because of the tax. Did you get this one?
Yes.
Consumer lost their satisfaction, their surplus because of the tax. How much? 562.5.
Right.
This is the loss because of the tax. And again, you have to calculate the value for the producer surplus. Half into length. Now, this is the problem. In here, you cannot calculate it. Is very easy. Okay. Another things you have to calculate in here. So this is the point where you can identify equilibrium quantity as 200. Just look at that one. This 200 cross the line of all supply curve in here. I mean, exactly this point. Okay. So you have to identify what is the value of that point, price value at that point. Did you get the idea?
Yes, sir.
This is the new equilibrium quantity. This new equilibrium quantity cross the old QS curve. You have to identify exactly price at that point, but we don't have any idea about that. So we have to calculate it. How we can calculate it? Get the old QS curve, QS equation. QS equal 20p. Okay. At that point, quantity value is just 200. The value 200 in here. 200 equal 20p. Yes. Now you can calculate the value for the p.
180.
No. It is just 10.
Sorry. Yes.
10. 10 equal to p. So then this value is must be equal to 10.
Yes.
Okay. So that is why I already said that after calculation can be wrong. After wrong calculation, you are going to put the value in here, then you can identify this must be changed. That is what the important things. Okay. I already said that. This is 10. So now it is complete. Now we can calculate the producer surplus in here. Okay. This point, and this point, this triangle, this triangle represent the producer surplus after the tax. After tax, yes. Okay, the length value is 200. This value is just 10. Okay, 10. Right. 200 multiplied by 10, it is just 1000. Similar effect, 1000. In here, you can identify another things. What is? Because of this tax, producer lost their surplus by 562.5. Similarly, happened to the consumers also. So again, very important thing, okay? Very important thing. Clearly identify what I'm going to say. This area was related to the producer surplus before the tax. This area was belong to the consumer surplus before the tax, but it reduced to this area. So then now you have to identify what happened to this area. Who will own this area? Especially this area. How we can represent this? We call it tax burden of consumer. Tax burden of consumer. අපි ඔකට සිංහලෙන් කියනවා බදු බර පාරිභෝගිකයාගේ බදු බර තියෙන එතන. පාරිභෝගිකයා දරන බද්ද තමයි එතන තියෙන්නේ. Tax burden of consumer. So this area, I mean this area, blue shaded area, represent the tax burden of producer, because that already belong to the producer, but it lose tax burden of producer. Now we can calculate it, isn't it? Yes. Area values, nothing to hesitate, just area value. Okay, let's calculate the tax burden of consumer and producer. First one is tax burden of consumer. Okay, you can calculate with me tax burden of consumer. Okay, length is 200. Height is 15 minus 12.5. It is 2.5. Yeah, 2.5. 2.5 multiplied by 200. Okay, it is 500. Yeah, 500 is the tax burden of consumer. So what about the tax burden of producer? It also same value. Okay, I think it is same. Yes, it's same. 200 multiplied by the difference between those two, 2.5. It is 500. Tax burden is similar. Okay, do not mess with the identification related to the tax burden and consumer surplus. This is different concept. Okay, different concept. Right.
So the burden of the consumer and producer can be changed, right? It's not always the same, right?
No. It's not always similar. It can be changed one commodity to another commodity, one market to another market. I will describe those things. Actually, that happened because of the slope of the curve. Now, clearly you can identify in here QD equal 500 minus 20p. This one. The B value is 20. What about the B value for the QS curve also? It's also similar. That means two curves, their slope is similar. Slope is similar. That means according to change in the price, the response of the quantity supply and quantity demand, it is similar. That's the theory. Okay. So then impact change in all things make similar values. If quantity demand QD equal 500 minus 10p, QS equal 20p, then it must be changed. Okay, in here, in this particular activity, it is similar because two slopes are similar values. Okay. So then another important thing is here. Government imposed tax unit tax. How much is? I think it's 5 rupees. Yes, 5 rupees. Okay. That what it mean? It mean if any transaction in the market, producer or seller has to pay 5 rupees for one transaction. That's the meaning. So can you tell me the amount of transaction after the tax? How much? කීයක් විකිරනවද tax එකෙන් පස්සේ? Just 200. This is equilibrium.
Yes.
200. Okay. And then they have to pay 5 rupees for one. 200 multiplied by
5.
So now you can identify the tax income of the government. How much?
1,000.
1,000 rupees. Another important things. Just identify the tax burden of consumer, 500. Tax burden of producer, 500. This 500 equal to this 500. It becomes 1,000 rupees. So then, if you combine the tax burden of consumer and tax burden of producer, exactly that value must be equal to the tax income of government. Isn't it?
Yes.
Yes. Then your calculation is okay. Because tax income is exactly equal to the tax burden of producer and tax burden of consumer. Nothing to hesitate. At that point, your calculation okay. You can identify that part. Okay? Right. Another important things. Okay? Look at the screen very clearly. This area, 12.5, E1, 0, that was the consumer surplus. But after enforcing tax, that become tax burden of producer. So what happened to this area? What happened to this amount? No idea. Huh? Again, look at this one. 25, 12.5, Q1. It was the consumer surplus before the tax.
Yes.
Yes. After imposing unit tax, what happened? It reduced to 15, 25, T2. So we know that this become tax burden of consumer. So what happened to this area? Is there any owner? No. This belong to the consumer surplus. This belong to the tax burden. I mean, income of the consumer, income of the government. This belong to the consumer. This belong to the government. But what happened to this triangle? There's no owners. Already that owned by the consumer and producer. Isn't it? Yes. Before the tax. This belong to the consumer surplus. This belong to the producer surplus. That's how it happened. But now there's no owner. We call it dead weight loss. Dead weight loss means after imposing tax, before that area was to economic surplus. Economic represented by the consumer and producer. It is belong to the economic surplus, but there is no any owner, no one to claim that area. Even government cannot claim that area. So it become a loss for the entire society. That area we call dead weight loss. Dead weight loss. We call it dead weight loss. Some question asked to calculate the dead weight loss area also. So it is very easy. Use the triangle value. Half into length and height. It is very easy. Yes. No need to worry about the equations. Okay. We are not expecting equation each and every times. If you can calculate by using another tactics, it is okay to us. It's not something like another subject. You're not expecting definition, we are not expecting definition, we are not expecting equations. Okay.
So then there the height is 50 in
Yes,
that.
height is 50. Length is 5. 5.
Yes.
Length is 5. Length is 5. Okay. 25 multiplied by 5. Okay. 25 multiplied by 5. 125. So this is the dead weight loss value. There's no anyone going to claim that area. It will be lost for the entire society. I mean, there is even government cannot claim it, producer cannot claim it, and even consumer also cannot claim it. That's why we call it dead weight loss, because already it will belong to the consumer and producer. After imposing tax, it will become a loss for the entire society. Society represented by the consumers and producers, and also the government. Okay. Right. This is the calculation for the unit tax. I think you got it.
Yes.
Okay. Right. Another things also will be included related to the unit tax, because there must be calculation related to the elasticity also. Can be included.
Yeah.
Okay. Now we have to identify before calculate the value added tax. I mean VAT. We have to calculate something very important. Or we have to identify something very important. Okay. I will close this page. Okay. Are you okay with that?
Sure.
Okay. Right. If you need this all calculations, I can send it as a PDF. Okay. Right. The problem is sometimes I'm going to erase the calculation. That is why. Okay. Right. You already asked that the tax burden for the consumer and producer can be equal or not. This is the question you ask. That is why I'm going to describe this point. Answer is it cannot be. It can be changed. So I will describe that situation by using different type of elasticity. Okay, just identify first option. Okay, the first option. This is Q axis and this is P axis, I mean price axis. Okay, and here this is P and this is Q. So just consider we already identify normal, I mean normal supply curve. Okay, this is S1, but the elasticity of the demand curve is different. It's not normal. We already identify something like that curve. We call it perfect inelastic supply. I mean, PED already become 0 at that point. Okay, we call it perfect inelastic. Perfect inelastic demand situation. Okay. So you know that at that point, demand curve is parallel line to the price axis. Okay. And then we are going to impose tax. Okay. So what happened to the supply curve? Supply curve shift to upward. Something like that. Parallel line to the first one. This is S. With the unit tax, it shift upward. So what will happen? Because of that kind of situation, quantity is not going to change. But what will happen to the price?
Increases.
Price increase. Only price change. There's no effect to the quantity. Okay, first one is no effect. Q S O Q D. It is similar. But price increase. That happened. Okay. So what will happen to them? Who will be the owner of this entire tax burden? Entire tax burden go to consumer. There's no effect for the supply. Entire tax burden go to the consumer. This area is the tax burden for the consumer. How you can identify this? There must be a doubt. Just identify this is the demand. Okay. And they are already purchasing 200. Purchasing 200 for the price of 20 rupees. So you can identify the expenditure of consumer. These simple calculations. Okay. It is 200 multiplied by 20. 200 multiplied by 20, it is
400.
4,000. Okay. Yes. Okay. And then this is the expenditure of the consumer. So after enforcing tax, there's no change in the quantity. Okay. Same amount, but price increase to 30 rupees.
30.
Yes. Yes. Then
60.
now what will happen to the expenditure? It increase. Increase to
6,000.
increase by 2,000. This 2,000 paid by the consumer, isn't it?
Yes.
Yes. That is why I say that entire tax burden goes to the consumer.
Consume.
So then there is no any negative impact for the producer. Producer can earn more and more money because of the price increase.
Yes.
Yes. With the price increase, but already we know that if there is a price increase, but quantity demand reduce. But in here, there is no something like that one. So price increase of always create good situation for the producer because there is no tax burden for the producer. Already each and every entire tax burden paid by the consumer and is going to be paid for the commodities also. So then there is no impact for the producer. That is why I say that entire tax burden goes to the consumer. So now you can identify if demand curve perfect inelastic when the supply curve is normal, entire tax burden goes to consumer. That's the situation. This is the one thing. So now you can identify there is no same tax burden. Producer's tax burden 0, consumer tax burden 100. 100%, 0%. This is a change.
Yes.
Okay. The main impact of that kind of behavior, it is elasticity. Elasticity of the demand and supply. Okay. And next one. I will send the document. Okay. Oh, are you going to copy this one?
I'll copy that, sir.
Okay, right.
Yes.
Okay, right. And next one. Okay. How tax burden and consumer tax burden and producer tax burden can be different values. Okay. So I will describe by using a curve. Okay. This is Q axis and this is P axis. In here, I'm going to describe normal supply curve. Okay, supply curve is not going to change. It is something normal supply curve. You can identify as S1. But the demand curve is relatively inelastic. Relatively inelastic. It is not perfectly elastic, okay? Relatively inelastic, something like that. Okay. If it is something like this one, we can call it perfect elastic, perfect inelastic. But something like this one, relatively inelastic, inelastic. Okay, right. The demand elasticity, relatively inelastic more than supply. Demand inelastic. Okay, so this is the point where we can identify the equilibrium position. Okay, but just consider after this situation, government try to impose unit tax, and what will happen to the supply curve? It increase. Okay, upward shift. So this is the equilibrium point number 2, and this is the equilibrium quantity. Okay, so now you can identify where the tax burden of consumer and where the tax burden of producer. In here, you can identify this 3% the tax burden of producer. This area 3% tax burden of consumer. Now you can identify if demand curve relatively inelastic more than the supply curve. Consumer tax burden taking greater value than the producer tax burden. That's the situation. But in here, you have to identify without drawing the curves, you can identify that one. How you can identify that one? There's a tactics you can use. I will describe how you can identify that one. Okay, clearly try to identify. This is demand, this is supply. I will describe this situation by using my tactics. I don't know whether this tactics uh, described by any book or something like that. I don't have any idea, but I take something like that tactics. Okay, this is demand and this is supply. In here, demand is relatively inelastic, but supply, it is not inelastic, it is normal. It is, that means normal elastic supply is inelastic. This is elastic. So what it represent? In here, I think that like that. If demand inelastic, that means according to change in the price, demand cannot respond because it is inelastic. Okay, response is low. Okay, response is low. But in here, I mean supply, it is elastic. Elastic means according to change in the price, they can change the quantity. We call it, there's a response. This responsiveness is in high level. Okay, right. After imposing tax, supplier can change because he got the response. Okay, I mean he is the elastic part. Okay, so he can change, but he cannot change. I mean, he can change some amount, but changing is very low. So if they're in a danger in the society, if they're in a danger in the society, who can survive? Changing person or non-change person?
Changing person.
Changing person. Yes. For that one, this is the party who can change. So then they can avoid from the tax burden. This party cannot change. So then he has to take the tax burden. This is the secret behind that one, isn't it?
Yes.
It's not a something high level secret. It is simple thing. Take the real understanding of these words. Elastic or inelastic. Elastic means response. Inelastic means low response. That means he's not going to change according to change the price. But supply can change. If they're in danger in the society, who can change their attitudes and behavior, he can survive. That's a theory, normal theory. But if they're in danger in society, the people who cannot change their activities or behaviors or thinking pattern, he has to face the danger. That is what happened. During the pandemic time period, you can take the many kind of example from that kind of situation, isn't it?
Yes.
Yes. So that's the secret behind that one. By looking at the curve, it is demand curve inelastic. So at once you can think larger part of the tax burden has to take by the consumer. By looking at the supply curve, you can identify it is elastic. Okay. Minor part of the tax burden has to take by the supply. That's the secret. So now you got the answer for your questions, isn't it?
Yes.
So this is the answer. So explaining the concept is very difficult. Okay, it's not a
Yes.
very simple things. Explaining some kind of concept related to the economics, because each and everything linked to one by one, one by one, one by one. So it is very hard to do. That is why already I say that conducting 3 or 5 lectures for the entire semester, I think is non-valuable. It is something like that. We cannot do anything. I mean anything. Okay. I think you can agree with me, right?
Yes.
And let's move to the next one. Okay, next one. We already discussed two. I think you need to copy this one.
Yes.
Okay, right.
I did, sir.
Okay, right. Okay, let's move to the next. I mean, I already discussed one option, one occasion. Second occasion, this is one. Impact of the tax. Okay. Third one. This is third one. Okay. Right. In here, so just consider demand curve. Okay. Demand curve is something like a rectangular hyperbola. Rectangular hyperbola means demand curve is not going to cross the price axis or quantity axis, namely known as unique elasticity. Yes, something like that one. Unique elasticity. but the supply curve is normal supply curve. This is the equilibrium. Okay. This is the point where we can identify as equilibrium. After imposing tax, supply curve upward shift. This kind of upwards. So this is the equilibrium position. We call it T2. And this is the new price, I mean P2. This is Q1. This is Q2. Exchange. Okay. So this is the amount we can identify as P3. In here, we are going to represent the producer tax burden. In here, you are going to represent the consumer tax burden. Okay. At once, you can identify the tax burden of consumer and tax burden of producer similar, no change. We already calculate that kind of calculation. 20p, 20p, something like that. Already calculated. Similar impact. Okay. So now you already identify unique elasticity always represent the elasticity each and every point of the demand curve. It is 1.
Yes.
Always 1. Every point 1. So that is why it becomes something like that. Okay. So those are the points you can use the knowledge of elasticity. Okay. Right. It is simple. I will shift to the 4th point. Okay. What will happen at that point? So then again, I'm going to show the demand and supply curves. But at this point, demand curve relatively elastic. Demand curve relatively elastic, but supply curve is a normal supply curve. Start from the 0 point is normal supply curve, but demand curve relatively elastic, something like that one. Elastic. Okay. This is demand. This is supply. Okay, this is the equilibrium point. Yeah, you can identify the equilibrium quantity. This Q1, this is P1, I mean equilibrium. But after imposing taxes, the supply curve can shift to upward, something like that, parallelly shift to the upward. This is the S with the taxes. Now you can identify new equilibrium price and new equilibrium quantity. But look at that. What will happen to the producer tax burden? It a greater value than the consumer tax burden. Now you can identify how it happened. This is my method, demand and supply. Demand is relatively elastic. Elastic means it can change. Okay. Supply, it is normal. Okay. It also elastic, but the elastic level of the demand taking greater value than the supply. Demand can change, more and more change, high level change, high level of change. But supply also can change, but lower level of change. Who can avoid it from the danger?
The consumer.
Demand. Consumer.
Demand, sorry.
Consumer. That is why low part of the tax burden taken by the consumer. He can avoid by the tax, by changing the quantity supply. In here also you can identify it. Look at the quantity change amount. Look at the price changes. Yes, quantity change amount taking greater value than the price changes. That means consumer change their quantity more than price changes. I mean, response is taking greater value. That is why he is going to avoid from this tax burden. Larger part of the tax burden goes to the producer. This is the theory. Okay, this is another one. Are you okay with this one?
Yes, sir.
Okay, right. Let's move to the last one. Okay, I mean, this is fifth must be okay, right? Right. This is price axis. This is quantity axis. Sorry. This is this. And demand curve behave as a parallel line to the horizontal axis. Why? Because demand is perfect elastic. I mean, perfect elastic means PED equal to infinity. Okay, this is supply curve. After imposing tax by the government, it changed. I mean, supply curve shift to the upward in parallelly compared to the previous supply curve. This is S2 with taxes. Then what happened? There's no change in the price. No change in the price. Same prices.
Yes.
Only change quantity.
Continue.
Quantity reduce. Quantity reduce. Okay. So imagine that kind of situation. No change in the price. Price is similar. Okay. But the quantity demand change. I mean reduce. So who will win the battle? Consumer. Just as an example, I will describe that by using this one. Okay, numbers. Just consider this. This is 200. This is 100 quantity. Okay. Price, already price was 20 rupees and the quantity was 200. And then 400 is the 4,000 is the income of the producer or seller. But quantity change because of the tax. So then it become 2,000. Okay. The income of the or revenue of the sellers reduced. Okay. So what happened to the expenditure of the consumer? It also reduced. So there's no difference between expenditure and income of the sellers. Similar values. Already it was 4,000, but it changed to 2,000. So 100%, 100% benefit goes to the consumer. Tax burden, entire tax burden goes to producer. Okay? Entire tax burden goes to producer, this amount. Goes to producer. Nothing to do with that one. Because already price not change, quantity reduce. දැන් බාන්න එක මිල වෙනසක් වෙන්නේ නැතුව විකිනන ගාන අඩු වුණා කියලා හිතන්න. ඉතින් කවුද පාඩු දරන්නේ? විකුණන කෙනානේ පාඩු දරන්නේ. අපිට නම් ගානක්වත් නෑ. අපි එදාම ගත්ත ගාන එදාම මේ මිලට ගන්නවා. එහෙමනේ කරන්නේ. Right. This is the thing you have to identify in here. Okay. These are very important. Right. Again, you have to identify value added taxes. Okay, value added tax is very important topic. I will describe how it happened to the how it affect to the entire calculations. Okay, by using a graph. You already identify that the impact of the unit tax for the supply curve parallelly shift to the upward. That's the theory. But in here, it's not similar to the unit tax. Okay. So you can identify that impact of the value added tax. I mean, tax on the value of the commodity is very much different from the unit tax. So just consider normal demand curve is here. It's normal demand curve, backward, upward, or signal. There's no special characters related to that particular demand curve. Okay. But look at the supply curve. It also starts from the 0 point and upward going. This is the equilibrium position. In here, in the unit tax, QS A plus BP. We are going to add that unit tax QS A plus BP minus T. This is the method. Okay. But in value added tax, the calculation is different. Okay. QS equal A plus BP. This is the supply equation. QS equal A plus BP. This divided by T plus 1. This calculation is very much different. Okay. Don't worry about, I will simplify it. Okay. Do not worry about that one. I will calculate all the things in simple manner. You can change it, that one. 1 plus T is easy to calculate. 1 plus T. T mean tax. Okay. You already know that the value added tax always represent as a percentage of the as a percentage. 20%, 15%, 10%, something like. If tax is 20%, that means 100 for 20. So then what will happen to one? If the value of the commodity is 1 rupees, what will happen to the tax? It must be 0.2. So in here, we are going to put the value 0.2, not entire tax. Okay. But in unit tax calculation, you put the entire tax value. In
Yes.
here, we are not going to do something like that. Okay, as an example, just consider. I will give equation QS equal 10P. There's no value for the A value. Okay. So then QS equal 10P divided by this amount. I mean 1 plus tax is value added tax, VAT is 50%. 50% mean 0.5.
Right.
0.5. Okay. So then QS equal 10P divided by 1.5. Okay. So then 10 divided by 1.5. It is 6.666. So QS must be equal. Okay. 6.66P. In here, you can identify A value is not going to change. In unit tax, you change the value for the A, I mean intercept. Okay. Are you agree with that? Me? Okay. But in value added tax, I mean VAT, you are going to change the value for the B. B means slope of the curve. Already slope of the curve was 10, but now it reduced. How you can represent it? Something like that one. It is very easy to identify. Start from the same A value because there's no change in the A value. Intercept is similar and it's become something like that. Okay. The value of the corner can be changed. That's only had happened. Shape of the curve, only change of the shape of the curve. A is not going to change, intercept is not going to change. Crossing point of the quantity is not going to change. Only B value change, something like it also similar impact onto the commodity, isn't it? Yeah. Price increase, quantity reduce. That's what happened. Price increase, quantity reduce. You already can identify that in the unit tax also. Price increase, quantity reduce. But the problem is changing point. If you are using unit tax, you have to identify after calculation this unit tax for the supply equation, the value for the A must be changed. I mean intercept must be changed. But if you are going to calculate the value added taxes for the supply curve, D value must be changed. I mean slope of the supply curve must be changed. So this is the difference between those two. Okay. We will calculate all those calculation related to the value added taxes and unit tax again in next week. Okay.
So even in VAT we have the burden, right?
Just similar tax burden also similar calculation for the tax burden. This is deadweight loss. Okay, we can calculate all those things in next week. Need to get something in this session?
Yes, sir. It's quite hard, but
don't worry about that one. You have to refer all the videos.
yes.
It will be okay. Okay. Just identify මේකේ තියෙනවා මේ අපව refer කරන්න. මොකද දන්නවද මේ refer කරන්නේ නැතුව ඕක idea එක ඔළුවට එන්නේ නැහැ.